firstly, I think thanks everybody staying throughout. I think this is a penultimate or the last sessions. We meant this session to be a bit of a kind of wind down, at least for us, for most of us who have been working this whole year. Kind of a session where no holds bar with certain limitation, I guess, that you can ask any questions you want. I have kindly invited Suhaimi here, since we joined his My Fintech Week the last time, so I kind of reciprocated with his gracing us presence. So maybe I'll do this a bit of free format. I guess we'll be try to as frank and open as possible. Oh dear, Angelina asking. Okay, maybe we'll just free format and ask question first.
Hui Min Zung, Asrina, congratulations on a fabulous FinTech conference, meetup. Really fab.
Thank you, thank you.
The energy and electricity and the meetups and just seeing people get together downstairs and talking about business and opportunities has been fab. So the difficult question is, what's next in store and when's the next one? And what are your plans?
I will start first, which actually going to be fairly short since my chairman made some of the mention, but I'm quite sure people want to know what's, since some of you have heard the budget 2020, there's some very exciting things from Bank Negara too. So I guess some of you may have noticed the way we have structured our FinTech conference. We curated it carefully. Typically, we share in terms of the agenda, what's on our mind and share with you some of the development happened that year. And typically we shared what's on our mind in the coming year. So if you see some of the sessions that you have seen what we're talking about Islamic FinTech, I think while our current framework supports many of the Islamic products, but I think we want to pivot and focus. So that's definitely an area we are looking at very closely. This is also in line with the SPV 2030. And many of you would have heard, I think we are just at the beginning phase of our digital asset. We're looking to hopefully, come to conclusions on our ICO guidelines with further, how we think about as a digital asset, how does that work within our industry in the next 12, 18 months, further expanding, whether it's in fund management, whether it's in derivatives, whether it's in other area, whether how we can democratize either through fractionalizations, and all these are all on the cards. And obviously we'll continue to further develop the industry as a whole in all the various aspects. You heard about the whole afternoon about inclusion. I think there are some clever innovations. I commend, I think IFC sharing some of those case studies, and I think we can apply those capabilities across the board for many of us. I think, if you look at the budget, there's another aspects on social enterprises that we are looking to. We're grateful for government who gave us the additional funding to allow us to co-invest, matching what the private sector. I think we commend the government thinking about how can the public sector step back, and then how private sector as a whole, all of us can get. So I think those are many exciting things to come. With that, I'll pass to Suhaimi, go and cover a bit more on what's on the budget as well.
All right, thank you for having me this afternoon. I think let me just first address $1 million question that everybody keeps on asking me, whether my FinTech Week will be an annual event. Because we just had one in June this year. So the answer is, it will be done once every 2 years. And the reason being, one, is actually the fact that we want to deliver on our promises and focus on rolling out policies and making sure that whatever outcomes from the My FinTech Week can be delivered and be implemented effectively. Secondly, through Forum, for example, we have reached an agreement in terms of the kind of structured engagement that Bank Negara and other regulators will have with the industry, so that we can get valuable feedback from the industry in terms of what are the issues that you are facing and what kind of policy intervention that would be relevant for you. In addition to that, through Forum as well, there would be a more structured data collection so that when we do our policy calibration, it is done with evidence and with data supporting them, instead of just shooting in the dark in terms of supporting the fintech ecosystem. And last but not least is actually with regard to capacity building. In the past, what we have done is actually we have worked with MDEC in terms of rolling out our regulatory boot camps, which many of you have participated. We are now looking at a booster program, which we plan, where's MDEC, which we plan to actually roll out by year end. Izam is here. And that basically covers three mainstreams: legal and compliance, business model, as well as technology. So that fintech companies that need assistance, that require some kind of hand-holding and advice, can avail yourself to these kind of programs so that you can be viable moving forward. So that would be part of the capacity building that we plan to roll out with MDEC. And in fact, today, UNCDF also indicated interest to join that particular booster program. So we are finalizing the details. In fact, the two teams are actually working closely together to finalize all the details before we can roll out. In terms of the policies coming out from Bank Negara, the one that has been dominating the media would be digital banking framework. So it is on track to be issued by year end. But what we are issuing by year end would be a consultative paper. So most likely there would be a 2-month feedback period for everybody to comment on, and then we will finalize by end of Q1 before we open up for applications. So given that typically a bank would need, let's say, between 6 months to 1 year for the application and for them to be able to do all the duties, so most likely we are looking at beyond 2020 for them to be operationalized. So that's the status when it comes to digital bank. Other than that, many of you would have known that we have rolled out open API framework for the banking and insurance industry. We are looking at the open banking framework, but there are many challenges. There are many preconditions that are not in place. So we are trying to figure out what would be the best approach for Malaysia with regard to either open banking or open data framework, which may involve sectors beyond the financial sector, given the fact that you will need to have that reciprocal arrangement for the entire ecosystem to benefit from this open data framework. There are now 6 players, 6 partnerships in our sandbox testing their eKYC solutions, representing 13 different companies. So most likely, we would be able to see them graduating from the sandbox next year. At the same time, what we are doing is rolling out our eKYC guidelines so that those who can actually meet those parameters can go ahead to basically roll out the solution without having to come to the sandbox anymore. So that would be done as soon as we can, most likely by end of the year or early next year. Other than that, we are working with government for the National Digital ID policy, which would be the policy with regard to national digital identity and all that for the country. So in the interim, when that particular framework is not in place, then eKYC would be the framework that most players can avail themselves to be able to do onboarding digitally. What else? I'm sure you are aware about the interoperable platform through PayNet. So that basically connects non-bank and bank for you to be able to do credit transfer seamlessly, real time. So we are in the process of onboarding non-bank players, especially the large ones in this country, so that now if you have a particular wallet, with the introduction of standardized QR by year end, you will be able to then just use one wallet to transfer money to the other wallet within the system, so that you no longer have to keep so many wallets in your phone. So these are some of the policies that we are going to roll out. But yeah, I look forward to listening to other things that you may have questions about. Thank you.
What is the timeline we're looking at for the open banking framework?
You see, this is a very difficult issue. Initially, we have the framework ready internally. But then looking at the fact that our data privacy policy is a bit unclear, especially in terms of data ownership. Who owns the data in this country? What our PDP says is basically in terms of how that data should be managed and should be governed, but ownership is not clear. So there need to be clarity on that front before we can decide how to move forward. So I dare not promise when that will happen, but we are working out a timeline in terms of putting in place preconditions before opening up.
Other questions? Tons of people in the room.
I see people crowding there. Maybe just move over. I think there are some empty chairs here as well.
Yeah. John?
Hi, I just, obviously, I mean, you guys are, hello? Yeah, so my question is mainly, do you expect to regulate, make sure that the DAX, RMO, the digital asset exchanges comply with the FATF travel rule? And is there a timeline on that? I mean, I don't want to put anyone under pressure, but it's just something we're thinking about, trying to get ahead of it.
You're talking about the OECD FATF Regulation 15, is it?
Is it recommendation 15 or 16?
Yeah. So,
The data share, I mean, because it just popped
This
into
is
my head.
the service provider. This is the new June 28 FATF Regulation 15.
Yeah. So sharing data,
yeah, I think as you work through, since you're a DAX operator, so as you work through the process of going live, that those things will come into place. I think currently, I think if you read the recommendation, not sure I encourage people to read FATF. It's quite
I've definitely heard.
boring, but okay. But if you read the FATF recommendation, it does include things that people need to do. I think the bare minimum is KYC, AML, CFT, but also the sharing of information with the appropriate law enforcement agency and between each other if you notice certain sensitive individuals who pop up on your database or suspicious individuals. I think that can take many forms. I think certainly we're not trying to have like a full-blown information sharing system right off the bat on day one. But I think as we work through different operators come into force, come live, we will, look at how we can work out certain processes between the operators.
Okay, that makes sense. I mean, it also seems to apply to gaming companies who trade online.
You're slurring your words, so be clear.
Sorry. I mean, it also seems to apply to like gaming companies who, especially like games like Fortnite, where they trade non-fungible tokens and things like this. So I mean, they're definitely it's a blanket approach. So we fully expected you to put it on us. So we're just thinking about it in advance. The other thing is, if you have any comments on the current currency bill and what it might say about stable coins.
I'll take the recommendation 15 first. I think our positions are very clear. I think we will conform to, or at least follow the FATF recommendations. It is quite broad and general, and that necessarily, just not applying to DAX alone. I think the definition of service provider is fairly broad. We are currently looking at the wallet regulations, so we are going to implement part of the recommendations. Suffice to say, I think this thing, it is a recommendation for OECD, so we will be looking at the whole implementation of it. How broad and how deep, I think this one we'll still need to discuss. And in fact, both Bank Negara and us have a team working together specifically on this. So for sure, I think the short answer is yes, we are looking to you guys to implement it to the extent of which, like you say, which provider to extend to. I'll take a very myopic answer to this is that everybody who come into our regulatory space will definitely implement that. We can't do things outside our remit, right? There will be service provider out there who are outside our remit. We obviously need to look at broadly how that will be implemented, but for now, we're definitely at least going to look at what we need to do, so within our boundaries. But I think a short answer is definitely we need to implement the whole FATF recommendations and depend on how deep. Currency bill, back to you.
So when it comes to currency issuance in this country, So the only legal tender in this country is actually those legal tender issued by the central bank. However, we recognize the potential of stable coins for cross-border payments and for other usage. The issue is we also need to manage the risk of dollarization of our economy. If, let's say, other currencies are widely used in this country other than the one issued by the central bank, because that would make the conduct of our monetary policy becomes more difficult and more challenging. So we are basically still looking at it in terms of how best to deal with that, given that the nature of stable coins is also changing from time to time, and the kind of players and the kind of modus operandi is also changing. But yeah, so as far as we're concerned, the legal tender in this country would still be ringgit.
Yeah.
Hi, so I have a question that,
Maybe you want to say who you are and where you're from, then.
Oh, sorry, I'm Andrea from Maybank, and I actually have a question on how open is Bank Negara Malaysia on banks actually innovating? Because I think the situation in the bank is that we are always, I guess, having a wait-and-see approach, whether or not the Bank Negara approves this, and if they endorse this, then we'll start innovating? Or is it an approach where we can innovate first, and then the Bank Negara would just look at it and endorse it?
Am I glad that I'm invited, Suhaimi here?
Well, I think we have quite a robust policies in place when it comes to allowing people to innovate. And you have to understand, when we do our policies, it is calibrated to a certain level, because there are different levels of sophistication in the system, and you will not be able to calibrate your policy to cater for every single player in the market. But when you have other ways of actually addressing the concerns highlighted by the central bank, you should engage us, because regulation should not be a hindrance for you to innovate. Regulation should not be a hindrance for you to innovate, because there are many other ways that you can deal with the risk and highlight to us. Our main issue is actually we want you to know what you're getting yourself into and be able to then protect the interests of your depositors, that the kind of risk that you're taking, you know how to manage. So you are free to innovate, but you must do what you're doing.
Thank you. Hi, I'm Mariam. I'm from University Malaya. So I have two questions for Encik Suhaimi. It's about regulatory sandbox. Firstly, how do the tests in regulatory sandbox further the objective of financial inclusion? And secondly, how does the thematic and specialized sandbox that was actually announced reported in the annual report by Negara 2018? Thank you.
So our regulatory sandbox mainly caters for innovation with strong value proposition, where currently there are regulatory hindrances that you will not be able to roll out your solution because the current regulation does not allow you to do so. So by coming to the sandbox, we provide some policy and operational flexibility for you to experiment with your solution. And if, let's say, you can demonstrate that this particular innovation has a very strong value proposition, we will tweak and change our regulation. For example, the insurance aggregation business was actually a vacuum in our system. So there was no regulation that covers or governs insurance aggregation business. And given the strong value prop and the benefit that it can bring to the Malaysian economy, we have more or less now introduced a new category of license to regulate insurance aggregation. So we tweak our regulation to cater for this kind of innovation. The specialized sandbox is actually to cater for a group of solutions where they are already known to have strong value prop and allow them to basically expedite their innovation through special attention to be given by the central bank. And in particular now, what we have in the specialized sandbox is actually the eKYC solutions by these 13 companies that I mentioned earlier. So they are given special attention because the problem statement is quite the same. The technology may differ from one institution to the other institution, but the parameters and the outcomes that they need to comply with are also the same. So then we allow them a special track to experiment with that innovation. So those are two different things.
My name is Raja. I'm from Paymedic, M. Surian Brohat. Thank you on your stand on your innovation. We strongly believe, a lot of fintech guys strongly believe on innovation, and that's the way to move forward, sir. We came up with a solution called Paymedic, which allows you to deposit checks via mobile. In a way, according to BNM, next year, to process one single check is going to cost 6 ringgit and 80 cents. We can do it 50 cents below flat, and we can process in real time. We really hope that we can get an opportunity to present to you in person with all facts and figures, and this totally innovative solution. We really, really appreciate, sir.
Let me help you. I would question the notion, why do we ever need a check in the first place? So digital or otherwise. I think we should leapfrog and then just do digital payment.
Sir, in Malaysia, according to BNM, there's 100 million checks being processed as of last year, and that is interbank check. We have not included cash check, house check, and interbranch check. If we were to include these figures, right, the figures goes beyond that.
No, I understand where you're coming from. So basically, the role of regulation is basically to protect the system and not to protect any individual player. And there are certain solutions where we leave it to market force and market to basically decide whether it is actually a good solution for them to adopt or not. When there's a public policy objective, then the central bank may step in to provide the enabling infrastructure. So I guess, we can talk about it a bit more, but as I said, check is not something that we want to bring back to the system. Because ultimately, if I make check more sexy, then, the other objective of migrating everyone to e-payment and all that may take a step back. So I understand where you're coming from. In fact, this is not the first time someone came to me with this kind of solution, and I've been meeting, I think, more than 5 players on this kind of check imaging, enhancing the efficiency of check processing, etc. But, there's nothing preventing you from convincing the banks that this is the best solution for them, because if it helps them to be more efficient, I'm sure they will be partnering with you.
We do have convinced the banks. One of the issues that we have, the challenges, is the getting clearance from the regulators to roll out in the sandbox. And we have filed in IP. It's a Malaysian-made 100%. Not only in Malaysia and globally, IP. So it's really unique. I just need an opportunity to present and showcase to you, sir.
Maybe come and talk to us, because I don't see any regulatory hindrance when it comes to this kind of innovation. So then you may not even need to come to the sandbox. So I don't know what kind of blessing that the industry wants from the regulator. So, but yeah, maybe just send me an email and then we can look at it.
Thank you, sir.
Yeah.
Hi, I'm Mama from Raise. My question is, how are SC and Bank Negara collaborating with each other in terms of accelerating participation in the digital space, particularly the fintech industry? For example, a fintech company regulated by the SC has an important stakeholder, which are banks, which are regulated by Bank Negara. So how do they basically reconcile this, given that both regulators have their very own policies and requirements? Thank you.
We have teh tarik together often.
Among us, periodically, we will meet up for teh tarik session. And that is actually at our level, all the way up to even the deputy governor's level. This is basically to trash out issues and concerns. But of course, formally, we have MOU between the two agencies that governs our cooperation. In fact, when it comes to the digital assets, we work closely together over many months. We argued to find what would be the best framework for Malaysia. In fact, this week, SC and Bank Negara, we are meeting to discuss about what would be the future strategies for the financial sector moving forward beyond 2020, because both financial sectors' blueprint are coming to an end next year. So Bank Negara has started work on that. SA has also started work on that. So now we are exchanging notes in terms of are we looking at the same thing and what are the issues that both institutions are looking at. So this week, that meeting will happen as well.
I think, sorry, just to add on, I think it's quite funny. People tend to think that we don't talk to each other and regulators don't talk to each other. I think maybe, you know, if you think that we don't talk to each other, or I don't talk to MAS, or we don't talk to the Thai regulators, I think that's absolutely wrong. The regulators love to exchange notes with each other.
And we are on WhatsApp basis.
Yes.
Yeah, so.
Yeah. It's most people are just a phone call away, and you know, it's a close network that we keep, you know, to keep all of us updated and working in sync. Yeah. Yes.
Hi, good evening. My name is Vimal. I'm from Fetch. I'd just like to ask your opinion on a recent report where tech startups are exiting Malaysia, leaving Malaysia for better opportunities, especially when they cite the reasons like due to lack of responses or high strict regulations, or let it be from the regulatory or the on the government side. So what will be, I mean, how do you see this trend being reduced or in fact reversed one day where we can attract tech startups to our country? Thank you.
You want to start, and then we'll chip in.
I'm not familiar with that report per se. I mean, especially, I think there are many factors where, you know, either the tech company come to Malaysia or our company goes overseas. I think we would want the market forces to decide. I think our policy is very straightforward. I think if you can see so far, many of the innovations that we're trying to, I think we have now just under 30 new fintech firms in the last space of two and a half years. We have no restriction either in terms of equity ownership, or I think we gave a lot of flexibility and freedom in terms of what you want to do. Again, like I said, we have, I think, since the inceptions of our outreach program, we have more than 300 sessions. People come and tell us new ideas. We try to facilitate, we amend our guidelines, we facilitate many of the discussions. Again, like I said, I think if you think there are hindrances or hurdles that we want to cross, I think we're very happy to listen to them. And you know, if there are other particular constraints that we impose, you know, either from financial stability or some other concerns that we will either share with you, and we're happy to work out. And again, like I said, I think we will obviously hold dear to certain principles in terms of market integrity and some of the things we do. Again, we like to think that we create the environment. If there are technology firms, at least within the fintechs, I think we have, you know, whether domestic or abroad, have always, we have been quite an open door policy for that.
I think if you, just to add on, if you just look at, you know, the 30 people that we have licensed, registered, they also include actually the fair share of foreign players. You know, just to name a few, Wahid is from the US, Funding Societies, Stashaway are from Singapore. So we are also still, I think, attracting people to our market. I think from when we admit foreign participant to our market, it needs to be aligned to what we call the best interests of Malaysia, right? It's got to make sense. We are regulated for Malaysia, and we want to believe that they bring, they have the best interests of Malaysia when they come and set up shop. And a lot of times, you know, these people might come and they say, you know, I just want to open a rep office, 3 salespeople, 1 customer service staff, and then that's how you want to run the business in Malaysia. I think that doesn't really work for us as a regulator. You know, if you're serious about setting up business in Malaysia, we expect you to commit the necessary resources and expertise to build a sustainable business. Not something that you come, open shop, and then tomorrow, 6 months down the road, you decide this market is too hot for you, and then you can just gulung tikar and then you disappear. I think that doesn't work for us.
I think, if I may share, I mean, I've been involved in negotiating certain market access, especially for digital innovation with other regulators in the region. So I shall not name countries, but there are requests for a passporting regime whereby they want to be able to passport their fintech companies to Malaysia, whereby then the traffic will just be one-way flow because there's no interest from our players to go to that market, for example. So we have not agreed to that kind of regime because it will just be a one-way flow and to no benefit to the country. And there are also requirements whereby certain countries impose domicile requirement. If you get funding from that country, then your fintech company must be domiciled in that country. So, I mean, when they wanted to approach us and to do this kind of passporting regime, we said that, well, if you passport to us, we want that company to be domiciled in Malaysia as well. So whether they can agree to that or not. So the negotiation is ongoing.
Yeah, I mean, make no mistake. I don't think we're arguing that there is no flow out. I think there are. I think let's not be naive. What I'm reaching out to you guys is if you think there are, you think you need to venture out because of certain constraints, there are certain things that's stopping you from doing business here. At least for both of us, we want to hear it, right? I think, at least give us a chance and we'll have a look at it. I mean, if something we can't facilitate, I'll tell you we can't facilitate. But if we can facilitate, then we'll look at it, right? Again, this is about, we have the market in mind. I think some people, you guys heard this morning, they say, is it too many players, is it too little players, do we need more players? That one, I think we will look at it, right? Again, best interest of Malaysia is what at the core of our thinking.
Maybe I can just add. I think there are several reasons why people move. Sometimes funding, maybe they're going for a bigger round, and sometimes maybe the VCs in neighboring country are better at funding a bigger round. But do bear in mind that the SC also has Fintech Bridges, which is MOU that we sign with other counterparts in Singapore, Australia, Hong Kong and all that. So for our fintech players who have established themselves here and they want to expand, you can actually come to us and we can facilitate referrals. It's not a guarantee that you can actually get a license, but at least we can refer. And then the regulators can guide you with respect to the regulations that you need to comply with, right? So if like 6 jurisdictions altogether, there will be one more soon. 7 soon, yeah.
Hi, I'm Stephen from a fund management startup. I think this relates to a cyber risk perspective. Would there be any subsidy or financial assistance for talent programs or cyber risk infrastructure contingency plans, or you call it business continuity plans? Because I just attended the cyber risk forum next door. They didn't mention, I did ask about the cost to set up this backup infrastructure. Would there be any assistance on that?
I'm not sure what sort of assistance you're looking for. I think it's it's important for all our fund managers, or at least the licensed fund managers, needs to comply with at least our cyber guidelines. There is 2016, and there is an expectation from us that there will be a minimum standard you need to keep to. I think we have now, this is second year we conduct the cyber drill. I'm not sure that your firm, I think we are going through, I think if you belong to phase 3, then it will be next year. But I think phase 1 and 2 is fully rolled out already. So we will be I would say I think this year we have 78 participants, 78 regulators are in there. We are expecting broader implementation across the board. In terms of, I'm not sure about the assistance. I think we are conducting trainings. I think this year there is an enhanced training. Last year I think we had a basic one. But I think, again, our expectation is for you to be able to build your capability. There are programs, whether by SIDC or other programs, we are currently working with NAXA as well as Cybersecurity Malaysia. We have a series of structured programs. All of you are encouraged to attend. And part of the cyber drill that we conducted annually is they need to, at least a minimum is attend the basic course. Again, I think it is limited to 1 or 2 individual per entity.
what we're trying to push for the relevant authorities to do is actually to have a more holistic and in-depth national strategy with regard to cybersecurity. This is taking into account the fact that as our economy becoming more and more digital, there'll be a lot more players in that space, especially the smaller companies, which may not have the capability to defend themselves as compared to, let's say, the large banks and insurance companies, because the investment to protect yourself in that against cyber threats and all that would be quite massive. So we're trying to basically push for the relevant authorities to look into this space and see how best we can protect our ecosystem and help the smaller companies to also be able to then defend themselves in this digital economy space. Having said that, within the financial sector, we are rolling out what we call Fintech, which is actually a financial threat intelligence platform. So basically, the entire FIs will then channel their external logs to the platform so that we can monitor and detect cyber risks in real time. So that, you know, when there are cyber attacks, it doesn't move from one bank to the other FI. At the same time, all FIs can defend their parameters at the same time. So that is done in phases. Currently, it is focused more on our regulators, but I do not, well, I mean, we may in the future open up to other players in the market as well, but it is still at a very early stage of rolling out to build our cyber resilience within our financial system.
Sorry, you mentioned just now Fintech?
Fintech.
Fintech.
Yeah, so, but this is, we are starting with banks. So they would have actually a threat platform to identify what are the threats, external threats coming to their institutions. And it is like a platform that would be able to then deal with all these emerging threats in real time. Because currently, each bank individually would have to defend themselves against cyber threats. So with Fintech, then, you know, the entire ecosystem will be able to see what kind of risks coming to other players as well, so that you can be prepared to deal with this kind of threats.
Let me be blunt a bit and direct. I think the infrastructure build-up of this would be costly initial phase, so I think the bank will pay for it first. I got no money.
All right. Question at back.
Thank you. Simon Rakoff Technologies. First, a comment to my fellow entrepreneur over there, indicating that regulation might push companies out of Malaysia. I would like to add a different perspective to that, as somebody who comes obviously from outside and is investing in Malaysia now. So I believe as entrepreneurs, we also need to see regulation not as a threat to our business, but as an opportunity. So strict regulation can actually help you. Give you an example. So if you look at the tax regulation of Malaysia, it forces you to have a trust account for your funds. To my knowledge, other jurisdictions, even the regulated ones, don't force that. Now you can either say, hey, that's a problem, I have additional costs now, or you can say, that's an opportunity. I can market to my customers, which don't know me because I'm a small startup, and I can tell them, hey, you know what? Your money is safe with me. Because there's a regulator who will shut me down if my hands are in the cookie jar, right? If you deal with one of my competitors somewhere else, you can't be sure. They might promise you whatever, but their regulator will not enforce it. Yeah, so I think from entrepreneur to entrepreneur, I think we need to look at regulation more as an opportunity. Now coming to my question. So one thing I hear a lot about since I'm here is data residency. So I have people telling me, oh, all your data has to be, if you're a fintech and you're regulated by Bank Negara, your data has to be in Malaysia. But I also had people from providers that have their data centers in Singapore tell me, oh, no, this is nonsense. Bank Negara is totally okay with you hosting your information in Singapore. If you could just help me to give some clarity from Bank Negara and maybe also a SC perspective. So if I'm regulated by you, where do I have to put my data?
So we used to have that requirement, but that requirement has been liberalized since early this year. And basically the requirement now is for you to basically, again, as I said earlier, know what you're doing in terms of managing the risk associated with having proper oversight on those data and making sure that it is safeguarded properly.
Yeah, I think similarly for the SC, we do not have a rule that says your data needs to be in Malaysia. Again, it's based on a risk-based approach similar to Bank Negara, where, you need to know what you're doing, just to echo what Suhaimi said, and know how to manage the risk associated to your data if it's hosted in a different jurisdiction. Yeah.
So you can refer to our outsourcing guidelines. Yeah, so it is a specific guideline that we have.
Hi, I have a question about digital asset trading. I'm Raymond from Tradalytics. My question is, does SC intend to make digital assets face the same scrutiny as capital markets? And if so, would they be afraid that digital assets will lose a bit of its appeal? I repeat again. Does SC intend to make digital asset face the same scrutiny as capital markets? And if so, they are afraid that digital assets would lose a bit of its appeal?
Actually, the answer is straightforward, right? So we prescribe digital assets when they are used for trading or fundraising as securities. So as securities, they fall under the full ambit of the Capital Market Services Act, CMSA, and all rules apply, right? So
let me just
I'm not sure about the appeal part, but yeah.
I just that apply across not just digital asset. So everything, we don't have it's all the same, right? I think whether you are crowdfunding or you're doing fund management, right? The KYC is exactly the same. The CDD guideline doesn't say it applies to fintech firm so it's applied across the same, same. So, people are scared about some of these press statement earlier talk about, 10 million fine and, 10-year jail term. It applies across all infringement and all enforcement actions. So it's not that, one area you do is lesser or more.
I think a lot of people have already accused us, rather funnily, of uneven playing field, right? So I think we always tell people, right, the same non-face-to-face KYC steps that our fintech players are able to do, the incumbents are able to do. We have no special treatment, no special regulation, no special standard just because you're a startup or just because you're a 100-year-old company, right? The same guidelines for cyber, for customer due diligence, for AMLA applies across. Yeah. So you can say maybe, some people want to trade anonymously and that's not going to happen in Malaysia anymore, and because of that, that liquidity falls out of the market. Yeah, sure. But I think when you start operating in the regulated space, clearly anonymity is not acceptable to a regulator. Yeah, so I'm not sure about what the other stuff are, but happy to talk through it.
Assalamualaikum, Hisham. I have a question in terms of Bank Negara, in terms of the capital restrictions with respect to overseas investments by Malaysians who say they invest, they want to invest in Stashaway or other platforms, especially if it's say you're investing sterling in sterling and euro in euro. And also, is it self-declaration whereby you yourself would say, okay, I only have, I call it one loan, and therefore I can invest. Sorry, that's the two questions. And the third question is, you can correct me if I'm wrong, but I understand that if the investment overseas is purely Islamic, then there's no restriction.
I think you're correct on that second point. I have to admit that I'm not an expert on foreign exchange, so you better give me your specific case so that I can look at it. Yeah, so because, I can't really comment on some of the rules because they are quite technical and there are smaller fine prints that come with it, and normally we look at it case by case. Yeah, so maybe we can talk. I'm not an expert on foreign exchange.
Hi, I'm Shazi. I'm from Ouch, an insurtech player in Malaysia. Well, I just wanted to know for Suhaimi, what's Bank Negara's approach and aptitude towards digital insurer? And also, what's the expectation of a digital insurer in the future compared to conventional insurance?
So it is something that we are looking at parallelly together with digital banking. As you know, the insurance space is a bit lagging behind. So we would welcome any initiative that can help with insurance penetration in the country, subject to, again, being able to manage the risk associated with, moving fully digital. There are already initiatives towards that, but as I said, it is actually a slow-moving space in Malaysia, so any new players are actually welcome to talk to us.
One last question, cognizant of time and...
Hi, good afternoon. I'm Roy from Tunafin. Regards to the e-wallet, recently our government has encouraged the boarding of the e-wallet. But compared to China, the wallet size and the transaction amount per transaction seems still quite small. So is there any plan for Bank Negara to increase the limit of the usage each time?
We are revisiting the e-wallet guidelines, but of course we are cognizant the fact that the market is different between countries, and they have been pushed by certain associations and certain business associations for us to do away with regulation for wallet below certain size. But again, we will not compromise when it comes to consumer protection, as well as for ML and TF risks. So we are willing to discuss, and we are looking at increasing the wallet size. And in fact, there are certain companies that have been given approval to increase their wallet size up to 10,000, but subject to the company being able to show that they have been managing their business prudently.
With that, let me just take this chance to thank Encik Suhaimi. I think he has done most of the heavy lifting, at least for this hour. So big applause for him. Boy, am I glad I invited him here today. Okay, so with that, I would like to thank all of you to make our event a success, and it's actually a huge turnout, and I encourage you to attend next year. And I think next year is not my FinTech, it's the year after, right? So with that, thanks for attending SC by SC. I think, again, send us questions, either Suhaimi or myself or my team. We have an affinity email, which is our outreach program. You can reach out to us either through our website or through the email. And again, have a good afternoon, and thanks again.